So what are the changes relating to the real estate investment trust and the infrastructure investment trust? Now it may just happen that there might be a sponsorer who might be owning some shares in the SPV. Okay. He owns these shares which he actually transfers to a real estate infra trust. And in lieu of this, he receives certain units of the real estate infra trust. So what is the existing position and what are the amendments which are sought to be made? Whenever these units are listed, okay, and they are sold, the sponsorer of these SPVs do not get a tax advantage which is generally available for listed companies. Right? In view of this, there was a fear that the disadvantage that they were having was that instead of being taxed at 0% for long-term capital gain and 15% for short-term capital gain, they were being charged at a tax at a higher rate because the benefit of those reduced rates were not available in respect of these units which were transferred, or the shares which were transferred and the units which were received. Therefore, the amended provision now provide that the sponsorer would have an exemption from capital gains on listing of units for LTCG. Means when these units are received, if he sells them, if the gain is a long-term capital gain, it is exempt. If it is short-term capital gain, there is a reduced rate of taxation of 15%. This was not available earlier. Okay. However, the STT shall be levied on the sale of units of the trust. So when the sponsorer sells these units in the trust, he is going to pay a securities transaction tax. For the real estate investment trust, again, there's an amendment which says that wherever this trust receives rental income from directly owned assets. So one is they could own these SPVs who in turn owns real estate assets. Or they may actually directly own some properties as well. So whenever they own a property directly from which they get a rental income, then there will be no TDS by the payer. Such taxable income shall be taxable in the hands of the unit holder. Okay, so whosoever is the unit holder in this REIT is going to pay taxes. And when REIT is paying the tax or actually paying the money in respect of this income to the taxpayer, they are going to withhold tax at 10% for resident holders and at rates in force for the non-resident holders.